Wall Street is revising forecasts on the grounds of global headwinds. The robust U.S. economy, stubborn inflation, the healthy labor market, and the corporate sector. The stock market survived the hawkish Fed minutes. The benchmark stock indexes showed remarkable resilience. Traders focused on the upside, and InstaForex experts have collected red-hot news and made the market analysis. The US stock market incurred losses yesterday, but the major stock indexes closed mixed. The Dow Jones extended its slide and lost 84 points or 0.26%. The Nasdaq reversed upwards and added 0.13%. The S&P 500 closed almost flat. The index inched down 0.16% to close at 3,991. The top stock indexes regained previous losses in the New York pre-market. Futures on the stock indexes gained 0.2% and 1% before the publication of a macroeconomic data. The S&P 500 is expected to trade in the corridor between 3,970 and 4,090 points. Investors were cautious on Wednesday ahead of the U.S. consumer spending report. The Fed minutes did not reveal any sensation to the market, gave a muted response. At the first policy meeting this year, almost all Fed policymakers voted for a modest rate hike by 25 basis points. Nevertheless, they confirmed that the risk of a persistently high inflation remained the centerpiece of the further monetary policy. The regulator is committed to further monetary tightening until inflation is firmly stamped. The document did not spring surprises. They followed later in February. Notably, the policy decision was made before the publication of the upbeat non-farm payrolls and retail sales for January, so the minutes were of a secondary importance to market sentiment. New York Fed President John Williams stated yesterday that the Fed is fully committed to its fight against soaring inflation until it's brought down to 2% for a few years ahead. A small trading volume in the late New York session pushed the S&P 500 and the Dow Jones down. The Nasdaq managed to gain ground. The S&P 500 has been following the longest losing streak since mid-December. Most of the 11 sectors in the S&P 500 fell on Wednesday. The energy and the real estate sector displayed the weakest performance, having dropped by 0.8% and 1% respectively. The energy sector has been declining for 7 sessions straight because commodity prices are weighed down by investors' fears about the global economic growth and the energy demand. Today, investors are confident in the high-tech sector. The interest in artificial intelligence and chatbots benefited chip manufacturer Nvidia. Its shares jumped by more than 8% in the pre-market after the company presented its revenue forecast for the first quarter, which surpassed Wall Street consensus, and the revenue for the fourth quarter amounted to roughly $6.05 billion. Wall Street experts had projected the figure of about $6 billion. The bright outlook for Nvidia propped up the shares of its competitors, for example, Advanced Micro Devices, whose shares rose by 3%. All in all, stocks of chip manufacturing companies around the world went up today. Apart from corporate news, investors took notice of a weekly update on the U.S. unemployment claims. They closely monitor weekly updates on the back of the robust labor market. Investors were disappointed because the number of first-time jobless claims decreased by 3,000 last week to 192,000, lower than the consensus of 200,000. Not all macroeconomic data was a bad omen for Wall Street. The revised US GDP data for the fourth quarter was lower than the second estimate. According to the revised data, the US economy expanded by 2.7% sequentially in the fourth quarter, weaker than the 2.9% growth in the second estimate. Besides, the national economic output grew by 2.1% for the whole of 2022, matching the preliminary data. Apart from the mixed macroeconomic data, investors will be alert to the comments by Fed policymakers tonight, such as San Francisco Fed President Mary Daly and Atlanta Fed President Raphael Bostic. The US dollar felt a few attempts to climb to higher highs. Its index consolidated at about 104.50 before the Labor Department released its update. The instrument is likely to trade within the borders of 104.10 and 104.90 today. The greenback did not assert its strength across the board. As expected, it traded sluggishly after the Fed minutes. The document tells us about the debates between Fed hawks and those. The voting members agreed that interest rates should be increased further. The size of the following rate hikes should be adjusted to red-hot economic data. A few officials advocated for a sharp rate hike by half of a percentage point, while investors were evaluating the minutes. The US dollar index was trading around 104.48. The greenback owes its strength to rising expectations of a longer cycle of aggressive rate hikes. The US dollar index has been advancing since it printed a low of 100.80 in early February. Still, the index is far away from a 20-year high at 114.78 notched in October last year. The Canadian dollar is trying to recover after the US dollar spikes and amid falling oil prices. The USD card pair dipped by 0.15% to trade at 1.3530. The intraday carrier for the index is seen between 1.3490 and 1.3570. Oil prices are trading steadily today. Brent crude made the sharpest intraday slump yesterday in the last 7 weeks. Both benchmark rates lost more than 2% on Wednesday due to expectations of aggressive rate hikes. Brent crude futures climbed by 1.3% to trade at $83.65 a barrel. WTI futures rose by 1.2% following 6 weeks of losses. Aiming to support oil prices, Russia plans to cut oil exports by 25% from its western post in March. Oil output cuts in Russia and the reopening of China's economy will tighten the oil market and prop up oil prices. On the other hand, expanding oil inventories in the United States are viewed as obstacles to the oil rally. The American Petroleum Institute reported that the U.S. oil stocks grew by 9.9 million barrels last week. The government data will be on tap today. As for the crypto market, Bitcoin is vulnerable to the prospects of aggressive monetary tightening in the United States. Yesterday, the crypto skidded to $23,600 and rebounded to $24,500. Today, the token is aiming to consolidate at the current levels. Having grown by 1% today, Bitcoin is trading at around 24,110 at the time of recording this video. Ethereum and Litecoin added 2%, whereas Solana and Ripple shed 0.2% and 0.3%. The crypto news is again related to financial watchdogs. The U.S. Securities and Exchange Commission confronted a $1 billion deal by Binance to buy crypto lender Voyager. The main finance regulator of New York and Attorney General of New York also objected to the deal. Last month, Voyager obtained a court verdict greenlighting the deal. Now the deal could fail to scrutiny by the U.S. security authorities. The session today could not be lucky for Bitcoin. The token is expected to trade within the intraday corridor between $23,500 and $24,500. Plan your trading positions, bearing in mind a series of factors, including U.S. oil inventories data and remarks by the Fed policymakers. See you tomorrow.